Yes, finally again, it is Monday. It's time for MicroStrategy Monday. It's also time to be confirmed it's Monday by that early tweet from Saylor telling us how many thousands and thousands of Bitcoin he has bought in the last week. And if we weren't sure it was going to be Monday today, all we have to look is that the Sunday tweet from Saylor saying that dots are lacking on that graph of
The
showing
tracker.
NESR
Yeah,
tracker.
the tracker.
the tracker. By the way, like quick shout out to the tracker. I have personally been missing seeing the diluted share number. And they now have the diluted share number. That's awesome. I think diluted shares have to be counted when you consider, well, how much is the Bitcoin worth compared to the value of the stock. So I'm very happy to that. Also, so just logistical, Ben is not super well, so he may or may not join. He's not sure if he can speak. Ryan should join, but also Ryan is Ryan. Love you, Ryan. You know that. So we don't know when. Well, I don't know as the host when Ryan shows up. But I'm very happy today to have both once again Ponder Jeff, and also for the first time a guy that I think all of us enjoy watching and listening to on MicroStrategy True North, Soleil, whom I noticed a couple of weeks back when I was traveling and I was listening to you, and you guys are you're so many smart people, which also means you have less time on the mic, and I remember, like, first of all I thought, this guy is super cool and funny. I like this Soleil guy, and then you said, yeah, I have all these notes that I'm like, I really would like to share. And I'm like, okay, this guy is so smart that I definitely wanted to have you on and give you that opportunity to share like all the notes. But I know that was in the past. Now it's here. Welcome, Soleil, and welcome, Jeff. Good to be here with you. And thanks for showing up. How are you, Soleil?
Outstanding. It's an honor, so I appreciate you having me on.
I'm not sure what that honor actually can be contained to, but I'll take it. I'll take it. What about you, Jeff? You're super busy. I know.
Yeah.
We found out in the green room.
Yeah, super busy. Got a lot going on. About 70% of the reinsurance world, the reinsurance business in the market, renews on January 1st. So there's like a huge push at the end of the year to get all these deals done, get your capacity in, yada yada. Sign contracts, read contracts, share contracts, negotiate, do all this stuff. So yeah, a bit crazy for me getting here to the end of the year, but hopefully free up some time here in the near future.
Yeah, awesome. Yeah, I guess so. The whole rest of the month will be busy for you.
It's a little crazy.
So also, I think apart from Happy Monday or congratulations this Monday, also congratulations to you, Soleil, because you today have your first day not having to slave away.
Exactly. Yep. I'm semi-retired. I'm just trading in the stock market now, and we could probably just start with an in your face to the Bitcoin only bears. I got a little word for those chlamydia infested koala bears. Like even if I had like time to the bottom at 15K Bitcoin last year and did Saylor's triple maxi plan, I wouldn't be retired right now. Like MicroStrategy did that. You know what I mean? Like even if I had put together like 10 Bitcoin at the bottom, I'd have $1 million. But it's like the tools really aren't there to really live off the Bitcoin. I would just have to spend it. You know what I mean? And with certain, options, contracts that you can, and strategies that you can deploy, I'm able to just generate income from the MicroStrategy positions that I have. So, if I was Bitcoin only, I might be retiring next cycle, but it wouldn't be now. So I just drove to the sauna and sat there for half an hour because I could, and hope. Yeah. But it's going to give me more time to do real research. I got to try to keep up with these quants, and got a lot of good things coming down the pike, I think.
Yeah,
I think that's going to happen to a lot of people. I mean, the instruments that are available for MicroStrategy, a lot of the bears just don't conceptualize this or realize this, that the instruments available with the structure of the options market, anybody that's been in this trade for a really long time and is holding a very significant number of shares, it has the ability to not sell their stock, right? They can not sell their stock and use options to generate revenue. And, if their shares get called away, we talk about this a lot. Like, I'm not by any means, none of this is financial advice. I'm not recommending anybody run a covered call strategy right now. I think there's opportune times to do it. And right now, I'm not running a covered call strategy, but I'm planning on running a covered call strategy at a point in the time in the future to generate revenue and income off of my existing holdings. This isn't new, right? People do this on every stock in the entire market. So anybody that's coming out saying this is fucking crazy is stupid, because this is run on Tesla, Apple, like any stock in the entire market. There are people that are living off of this stuff, and they're structured investments over time. So I mean, people need to think about that. That's like many people are going to retire and then not sell their shares.
Yeah, absolutely. And I think selling covered calls will underperform over the next year, because we're just going to have so many Godzilla candles. It will definitely limit some upside. But yeah, I talked to a bunch of TradFi people, and they sell covered calls and cash secure puts in the most uninteresting shit you've ever seen. Like, just stuff with no vol at all, and the premiums are garbage. But even those guys can eke out a living, a decent living, actually. I shouldn't say eke out a living. I mean, some of these options traders do very well, and they're not even trading the best stock that has ever existed for running the strategy that they run. It's crazy. Sometimes I see their posts and they're like, "Oh yeah, I just sold a covered call on, I don't know, Microsoft or something," and I go to check the premiums, and I'm like, it's just terrible compared to MicroStrategy.
So, Soleil, Jeff is saying he's not doing this income generating strategy on his MicroStrategy positions yet, but you already are, as I could, right? So you are selling some out of the money call. I'm guessing you actually, why don't you just tell us?
Yeah, so I mean, I am definitely trying to stay unlimited upside long as possible, and this is probably the most not covered call selling I've ever done, to be honest with you. But if I don't have an income, right, and the mortgage is still due, first of the month just came up, but if I'm planning for January 1st and I need a couple $1,000s to pay my mortgage, then what are my options? I can either go and sell, what's the price down? Close to 400. So I'd have to sell 5 shares. So do I want to peel off 5 shares and pay the mortgage? Or, that's definitely selling them. Or I can put 100 shares at risk and maybe have a 30% chance of having to sell them, for, 20% out of the money. And even if they did get called away, I'd be making that extra 20% profit, and I get to, make sure that I don't get thrown out of my house.
Right, which is smart.
The math can get real nutty real quick, right? So I just pulled up some math on my Robinhood while Soleil was talking. So let's say you had 5,000 shares, right? Just to make it simple, let's say you have 5,000 shares and you wanted to put 1,000 shares at risk. Okay, 1,000 shares at risk for a month. On January 10th, right now, you can sell 10 covered calls and generate $8,000 of income.
Right.
For 10 contracts, which represents 1,000 shares. So you're putting
what strike?
At a 740 strike, $740 strike, 100% out of the money.
Yeah.
Right.
So you can actually still double your money.
So if you sold covered calls on 20% of your portfolio, you generate $8,000 of income. If the price goes to 740 and your shares get called away, the remaining 4,000 shares you have are now worth $740 or greater. And somebody is paying you $740 per share for the 1,000 shares that you put at risk. So you'd be making $740,000 of income revenue from selling 20% of your position when it goes plus 100%, and you still have 80% of your position remaining. And
Yep.
that's the power of this whole thing. And again, I'm not suggesting anybody do this at the moment, not financial advice, but like there's going to be times when you have asymmetric information of the rest of the market, when you know when things are happening, whether like a stock is compressed or if there's a blackout period, or, you know, these things are happening where you can sell that volatility.
Yep, absolutely. And I missed the top a little bit, but you know, you can even look at the options prices even now that what you just checked are probably half of what they were when we hit 475 a share. So like,
yeah.
if you can time it, and if you can be a sniper, and then because I think Climb That Ladder did that. I think he timed it pretty
Totally
well.
sniped it. Yeah.
And yeah, he jumped in there. I only sold one at 40.75. So I missed out on a bunch of that, but I was just so gun shy because, you know, I know you said not financial advice a couple of times, but yeah, I mean, just because you sell the 750 and it's like a 20% chance of going in the money, well, 20% chance means 1 out of 5 times it's going in the money. So this is not free money. We're not talking about,
It's a risk.
you know,
You put your shares at risk. Sure.
Absolutely risk.
yeah.
But
you can be strategic with it, I guess is what I'm saying. You can wait for implied vol to just skyrocket, and then, you know, you can try to be a little bit more of a sniper with it. And I'm trying to get on Climb's level with that.
Right. So just to reiterate, the worst case of what you described, Jeff, is basically 20% of your portfolio is sold at twice the price it has today.
Yes.
So it's like there's an upside to the downside, kind of like, okay, and the 4,000 shares you have also, by the way, are up like phenomenally.
Yeah.
So it's very interesting. So Soleil, I wanna ask you though. So you're not doing this all the time. You're doing it. Are you trying to time when the volatility, the implied volatility is higher and the premiums on the call options are higher, and then they're worth more when you sell them, basically? Or how do you time it? Selling the
Definitely
covered
trying to time it more. So if you would ask me that same question a year ago, I just mechanically sell covered calls on every single increment of 100 shares, no matter what I was trading. 100% covered calls all the time. And I was completely agnostic about the stocks that I owned. I mean, as long as they didn't have bankruptcy filings, like I just didn't care. If the premiums were good, then I would get into that trade. A couple of weeks later, if the premiums suck, I'm out of it again.
Mm-hmm.
But of course, I noticed MicroStrategy and how good the premiums were, but I just treated it like a leveraged play at that point. And then when I saw Quant Bros 1, I went, okay, hold the phone. I might have to reanalyze what I'm doing here. So, you know, 60-40 comes up a lot. So I think for me, someone who needs to generate income all the time, like I can't just not have income 1 month, right? You know what I mean? I can't just not pay the bills and not buy groceries. So I think for me, maybe like a 60-40, like 60% uncovered and 40%, you know, as long as the 40% is paying my bills. And then if we get some event where, you know, the price skyrockets, implied vol is through the roof, maybe I go up to 50% covered, and, you know, just add a few positions and then take off some positions when the premium is not as great. But the other thing is that I never used to carry long leverage unless it had a specific purpose. But now I'm carrying, you know, out of the money long calls and just crossing my fingers and hoping that the price will go up. And that is completely out of my wheelhouse. And if you talk to any options seller who does this for a living, that's just not something that you do as a matter of course. Like it's just weird. So I definitely got kind of stood on my head when I kind of started to kind of imagine what MicroStrategy could really be. So yes, I do sell covered calls routinely, but not against 100% of my positions like I would have done last year and not thought twice about it.
Right. So, and someone like me, I have very simply, like, I actually love options from like decades of buying call options. So very, very simple. You know, buying call options is something I believe is going to outperform. But if it's someone like me who now have a Fidelity brokerage account with some MicroStrategy stock, is that relatively straightforward to sell covered call options in an account like that? And we can always take it, you know, offline
It's
or whatever.
funny.
But
I think it's extremely straightforward. I mean, it's literally like 2 clicks of a button. You know, do you own 100 shares? Yes, I do. You know, pick the expiration, pick the strike. But I mean, there is a lot more that goes into it. And I think, especially for MicroStrategy holders, I mean, we're like Bitcoiners with our MicroStrategy. We're diamond hands. We don't want to have to sell our Bitcoin. We don't want to have our MicroStrategy shares called away. So I think one of the first things that people do when they test the waters with this is, let's just say that they sold that 750 strike, you know, for $800. 2 days later, MicroStrategy's up $50, and now it's like they'll just panic and they'll just be like, oh no, oh my God, the price is, you know, 475 now, and I'm gonna lose my shares at 750. So then they'll end up panicking. They'll buy the damn thing back for more than they sold it for. And then, you know, it's just this FOMO thing kind of in reverse a little bit, because you fudge yourself, you know, into thinking your shares are gonna get called away. So it's definitely, you have to know what you're doing. You have to you have to accept the risk that you're taking when you open the contract, because once you click send, that's it's over. That's when you you know, you're locked into that contract, or else you might have to, you know, pay to get back out of it. So it's not something that anyone should enter into lightly. But even the days to expiration and the strike selection can get a lot of new people tripped up. Um, you know, some people will say, "Oh, well, I'll just sell some into like 2026 and 2027, and I'm going to collect $100,000 or something all at once." And while that giant lump sum seems like, you know, a winner, and you know, you might even be able to pick the 1080 strikes or something and get that. Um, but theta is so small at that time, like you're gonna have to wait a whole year to collect that money. Um, and so I generally don't, you know, sell covered calls beyond 45 days to expiration. When theta is very high, I want the buyer on the other end of my contract, I want theta to be real high for him, and I want it draining into my account. So I think some of those things definitely trip up new option sellers as well.
I got you. Very interesting. And Jeff, please add, because we have your limited time, add on, you know, anytime you wish.
Yeah, I've got a few other things to just add on here, and it's the relative perspective of like what MicroStrategy as a $3 trillion company would be worth, right? So if we think MicroStrategy is going to the top of the publicly traded leaderboard, which would be 3.5 trillion today, what, you know, whatever that number is, a single share of MicroStrategy would be worth around $14,000. If you take into consideration future dilution from the ATM, maybe it'll be around $12,000 ish, something like that. So if you have a stack of 1,000 shares, you're talking about a $12 million portfolio. And if you're selling 1%, or if you're earning 1% on your portfolio a month, you know, you're earning, what is that, $120,000 a month on a $12 million portfolio, something like that, 1% a month. And so you start to see the scale of this, where it starts to make sense for people to put some of their shares at risk, because like they want to capitalize and capture some of that value to improve their lives, or do whatever they want to do. So the upside here is pretty drastic.
Yeah. Yeah. Both on MicroStrategy and yeah, on that strategy of also getting some monetization or some income out of it with the cover calls. I like that. And we'll need to look into it myself, but
yeah. and Saylor said it himself. I mean, he thinks there's, you know, you could run this to a $10 trillion company, and all of a sudden now you're looking at a $35,000 stock price, or $30,000 stock price. You know, after factoring in and considering the accretion, not dilution, the accretion down the line. So, yeah, I think there's a lot of things to take into consideration: your timeline, your horizon, how long you plan to hold this stuff, you know, your relative size of your portfolio, you know, what your aspirations are with a portfolio. Do you want to be a $200 million hedge fund manager, or do you want to have $5 million and live a happy life and own a farm and like a garden? You know, like,
yeah,
those are very different. Those are very different lives. And I think people need to be true to themselves about how they want to structure their life and design their life. And Bitcoin and MicroStrategy and Bitcoin correlated proxies like afford people to think like that. I think, who was it? What's his face? That comedian, CK. What's his something? Lewis.
Louis CK.
Louis CK. Yeah, Louis CK asked, what are we going to do to make more babies in the future? Basically, it's like it doesn't make sense to have babies in today's world, but like Bitcoin affords that makes that calculation, the calculus, far different if you're thinking about having a strong money into the future. So it's interesting. It's
Yeah,
fun.
and just to be clear,
Yeah.
I'm definitely, longer than I am short. Like my long call positions vastly outweighs my short call positions. So, some of the people who are commenting like, just buy on HODL, I totally agree with you. And especially if you still have your W-2 income. You know what I mean? Like you don't have to generate income. And if you don't have to, it's probably a no-brainer to not bother with it. You know what I mean?
Yeah.
Think about it in the future if MSTR goes up 10x or something from here, or more.
When?
Maybe you want to
Yeah.
think about some things like that. Like once you're just like, okay, I'm filthy rich or something, maybe that makes sense to think about it. But yeah, for somebody who doesn't need to do it, probably just don't do it.
Yeah, and it kind of comes
Yeah.
down to like, are you happy with your W-2?
Yeah.
And like
Right.
a lot of people are happy. Well, maybe not a lot of people, but some people are actually happy with their W-2 job and are like cool with just continuing doing what they're doing, and maybe have good work-life balance or something like that. But if you're looking to change that calculus, like these instruments become far more important in managing your portfolio.
Absolutely.
And we spoke about that also a little bit, Soleil and I, in the green room before, in terms of if the only thing you're doing is investing in Bitcoin and MicroStrategy, and then obviously everything is then very Bitcoin related, and the security I would personally want to have, and that will be a segue into talking about cycle as well. What I would personally want to do, I expect a cycle top to be probably around October next year. And I would want to take some profits from leverage products. I have some leveraged MicroStrategy exposure as well. Completely close that down in October, because you don't want to hold that on the other side of a potential top. I'd rather sell it a little bit before than after the top, honestly. But and then I would want to put that in something else, so I don't have this 100% Bitcoin exposure, which I've had for the last several years. I'd like to go through a bear market with having access to something else that only Bitcoin things that have gone down in price. And so we spoke a little bit about cycle. So far, the 4-year cycle is clearly intact. For me, the final boss has always been, well, if the central bank of United States start printing money to buy Bitcoin, that's probably the final boss, and that could eliminate a bear market. It hasn't happened yet. It may happen with Trump and the strategic Bitcoin reserve. What are you guys' thoughts on this 4-year cycle, and are we going to see a bear market in 26 according to cycle theory, or we're talking probabilities, of course, because we don't know if China, Russia, or US starts hoarding Bitcoin next year. But what's your thoughts?
I want to hear what Jeff has to say about if he thinks the cycle is going to continue or not. I kind of, just real quick before I give my thoughts, I thought we were going to get corporate adoption this time. I thought last time we got retail, and I thought this will be corporate, and I thought the next cycle would be nation state. And I'm like, holy shit, we got corporate and nation state in one cycle. So, yeah, what do you think about it? Gradually, then suddenly, Jeff.
Yeah, I mean, who knows where this could go, right? It kind of depends on the volatility is going to exist from now until 2032 or to 2036 probably, just because of the where we're at on the Bitcoin supply cycle. I guess where's my camera? It's where we're at on the Bitcoin supply cycle. Like the remaining 1% of Bitcoin will be in 2032, the remaining 1% of Bitcoin will be mined over the next 100 years. So from here to 2032, there's still going to be a lot of volatility because the newly minted supply is going to be hitting the market kind of daily for the next, what is that, 8 years. So I could continue to see a lot of volatility. And I think the term bear market will be much different. I think it'll be, we'll still see significant drawdowns. Like maybe we go to 750,000 and drop back down to 400,000, and that's like a holy shit moment. Like that's a huge drawdown. However, if you zoom out, like it's still 4x where we are today, and many people would be seeing that as a buying opportunity, especially if the indicators are, countries are buying this. US is buying this, China's buying this, Russia's buying this, countries are establishing reserves, corporations are adding it to the balance sheet. And that's where the game theory really intensifies. And we could see a lot of just continued volatility, I think, over the next couple of years. So I don't think a prolonged bear market is going to exist like where we were this last cycle where I don't know, when interest rates changed like 22 to the end of 23. I don't think we're going to have anything that's like that prolonged into the future, especially if you're considering the size and scale of what MicroStrategy is doing with their capital plan, right? They just in Q4, actually just in the last 40 days, MicroStrategy's raised $15.6 billion to buy Bitcoin. And they're not slowing down. And that's going to accelerate, not decelerate. And so just them alone, if other companies start to adopt that type of strategy, I think we could see significantly more capital come in via corporations and countries.
Soleil, before we jump to you, I just want to answer this comment. Cycle theory is that we're entering institutional area now. Like I would like to agree we're entering institutional area, but we have to admit that so far the price movement has been 4-year cycle is intact. So it's not dead yet. Maybe it will die. I hope so. I hope we go up only and no more bear markets. I'd love that, but we don't know. It's not dead yet, I would say. Also, whether Ryan was clickbait or not, there was a great comment in the beginning. Yes, you caught me just using him as clickbait. Ryan is off the internet. No, Ryan, as I tried to say, and I don't know if you were here for it early on, Ryan said he would be there. And then I got another text message from him this afternoon where I wasn't quite sure if it meant he's still going to be here or not. He wasn't really very specific on that. So I thought he was going to be here. He's not here yet, and I guess may not show up. Yeah, go ahead.
He was Army. So you have to tell him 30 minutes before, 30 minutes before. Is the way inspections work is like, the general says, hey, everybody has to be there at 7. And then the lieutenant says, all right, everybody be there at 6:30 so we can be ready for 7. And then the sergeant says, all right, everybody be there at 6 so you can be ready. And then, the lance corporal says, everybody be there at 5:30 so we can get ready for the sergeant. And then you just end up there 2 freaking hours early. So you got to tell him 30 minutes before, and then he'll be here on time.
I'll do that next time. I'll call him and double text him and everything. I'll treat him like he's still in the Army. I'm sure he's going to love that. We have another treat though for you instead, who was also clickbait but turned up. So that's a good thing. But before we go to you, Ben, Soleil, I think has his thoughts and comments on cycle theory, and then I'm looking forward to say hi to you, Ben. I presume your voice is doing okay, so you could join us a little bit, and grateful for that. Soleil, your thoughts on the cycle?
Yeah, cycle theory. I think we get it again, and Jeff might be more on the money because I think we dropped down 75% last time, so maybe we only get a 50% drawdown this time. But I think we have it, and it's for all of the reasons why people think we won't. The institutional adoption, all of these catalysts. Like the FOMO into this thing, I think is going to blow off top, just catch everyone off guard, and people are still going to be YOLOing into this damn thing with leverage at the frickin' top. right? If we do get
Mhm.
750K, or, and I mean, even if we only get 500K or, 750, or, I would love to see a million, but, probably not. But, if we saw something like that, people are still going to be leveraged into it 25x, 50x at a freaking million, because they're going to be like, well, maybe it goes to 10. And when all of those stop losses start to hit and people start getting liquidated, I mean, it could take 2 years to unwind all of that. And for that to just kind of find support and, claw its way back, I think the cycle continues, just because there's going to be so much FOMO. Tons of people are going to get wrecked at the top.
Yeah, and just to be clear, so the past this several last cycles has been 3 up years and then 1 year down, and then 3 up years, and sometimes the first up year people feel we're still in a bear market because we didn't reclaim all-time highs, and actually that usually take 2 years of a positive, but the last top was in 21, and then we hit the bottom in November 22, and then it's kind of been up since then, but of course never in a straight line. All right, thanks Soleil, and I tend to agree that so far, even though market is changing, human psychology stays the same, and we've gotten that
Exactly.
4-year cycle, and let's see, it all comes down to the final bosses, I think, of the big countries wanting to start accumulating. Ben, good to see you. How are you doing? Are you feeling better?
I do. I think I'm finally hitting the upswing here, which is kind of nice. I'm sick of counting my heartbeats in my eyes. That's not a pleasant thing for a while. So I'm glad to be bouncing out of it now. So everyone that's been asking, I've got a lot of message. People are very nice. I'm doing good. I'm doing good. I'm gonna make it.
Awesome, and we need that. We need that. That sense of reason, and the convertible bond knowledge, the PhDs, your PhD tweets. And I told you I have a question for you, actually, and it's something I do want to hear all of you about, unless, since we're on the cycle, we heard Jeff, we heard Soleil. Ben, do you have any thoughts on the cycle? And then I'll go to that convertible bond question that I told you I would have for you. You have some thoughts on the cycle theory?
Yeah, I'm actually less swayed towards a cycle this time. Now, what I mean by that is I don't think it's going to have all the same characteristics the prior ones have had. I think that you're going to see a muted cycle, right? Human psychology is probably going to force some level of a cycle to occur because people are going to be anticipating it. When you're anticipating something, people start selling and it kind of becomes a bit of a self-fulfilling prophecy, right? So I do think you're going to see some of that, but it totally depends on what happens probably in the next 6 months, right? If we do really start talking strategic reserve and that kind of stuff, I'm out on the cycle, right? I mean,
Yep.
at that point, when you've got those types of buyers, it doesn't matter how much retail dumping happens. It's not going to matter, right? So I tend to view it as if I'm looking at probabilities, I'm thinking that I'm starting to skew my own bias towards not much in terms of a drawdown, and by not much, I mean, we'll obviously see wild swings, because you got to consider this, right? Right now, you've got all these companies coming out doing this Bitcoin treasury strategy, or at least converting their own treasuries into Bitcoin. That becomes permanent capital for those types of buyers, right? So we're going to thin out the margins over time. And when you thin out the margins over time, it doesn't make the asset less volatile. It's going to make it more volatile, right? It's like if you had, 100 shares of a stock trading on a market and all of a sudden you got rid of 98 of them. Well, when those other two switch hands, it's going to whoever's buying or selling, right? It's going to start swinging wider. So I tend to think that we're going to see some pretty wild volatility during that run up, right? Like you might get these spikes, maybe we start seeing $100,000 candles up and down at some point here, right? But I do think that with the types of buyers that are coming into the market now, and the fact that these are large, permanent capital buyers, right, that are fully intending to hold this. Now we'll see. Some of them will sell it, right? I mean, you can't believe everyone when they say they're going to hold forever. You can probably only take Sailor at his word on that one. But it does start to dry out the supply that's available for trading. And because the traders control the day-to-day price, you got to look at the impact that's going to happen there. So do I think it's going to be a full cycle? I'm personally starting to, I originally did, I'm starting to drift away from that because I'm seeing too much tailwind now, right? You can't ignore everything that's happening broadly in the world, because let's keep in mind, this isn't just a, exchange level asset for trading anymore. Right now, it's becoming a strategic asset to massive entities globally, not just in the US. We focus on the US because most of us live here, but we're not the full picture here. So with that in mind, I'm starting to look at muted. I think you'll see some, just because people are going to be trying to get out before it might happen. So it'll create a little bit of a cycle, but I don't think it's going to be the long drawn out cycle like we've seen in the past. I think we're actually getting much closer to going pretty steep up the S curve here.
Yeah, and
we are.
especially like when everybody thinks they figured something out, then it just Max Payne dictates that it has to catch everyone off guard. So I thought about that too. Like the first time I ever saw, I think it was probably Plan B, and stock to flow or whatever, and I was like, holy crap, it's a 4-year cycle, and like, can it really be that simple? And I kind of started buying into the hype of the 4-year cycle, because I thought, well, if Bitcoin is just a protocol, maybe it doesn't behave like everything else that has ever existed, and maybe it really is just 4 years forever because it's just programmed to behave that way. But yeah, I can totally see everybody buying into the hype and then assuming, maybe doing some sell-offs like you said, and then everybody getting cut off guard because the bear market doesn't really happen the way everyone is assuming it's going to.
No, it's what we can say for sure is it's going to be incredibly exciting to watch it, and there's a lot of us that are going to be like, no, this time is different, and then maybe it's the same anyway. But who knows? It's going to be exciting. It doesn't matter. I have that convertible bond question for you, Ben, but I want to hear everyone here, of course. So my thinking last week when I was, we're all looking at what Soleil is doing. He's hitting the ATM, and then I was thinking, because the last time he did convertible bonds, he paid 0% premium, so there's no interest rate, and it converts with was it 65% premium or something?
55,
Or 55. Okay. So I'm thinking, well, isn't that better than hitting the ATM? Because when you sell stock, you're selling at what the price of the stock is now. When you are raising funds via convertible bonds, you're actually selling the stock 55% more expensive than it is.
Yeah. So the answer is yes. The convertibles are always going to be the most accretive thing they can do. The problem is they're limited on how many of them they can do. And when I say limited, they're limited by themselves, right? But it's part of the risk management framework that they have in place to make sure that they don't put themselves in a shaky position as a company. So that's why when they're looking at their leverage ratios, there's realistically is a range. I always say 25%, and Jeff put out some good information that kind of showed it hovering around that 25% range. I think the average was 24% for a while now. But so I look at it and say, my assumption is I'm going to look at them as trying to maintain a target of 25% leverage against the fair market value of their Bitcoin. And that allows for wild fluctuations in Bitcoin while still not being in any type of danger on these. But whenever they can do the convertible bonds, they want to do them in a position where they're as accretive as possible. So like this last one, right? Getting 55% premium is huge. I mean, I'd have to pull up my my chart here to see where that strike actually ended up. But I think like when I look at the 130 conversion, the 130% conversion price on that one, we're talking $874.12, right? So, and obviously it was 30% below that was the conversion price, but they're raising capital at tomorrow's prices and deploying it today to get permanent capital on the balance sheet. So yes, convertibles are always going to be the most accretive thing that they can do to the Bitcoin yield, right? So you're going to always see them focus on that, but they're going to keep trying to get as good of terms as they can get. Getting to 55% was massive. That was huge. They also clawed forward the conversion date. So it's only, I think it's 2026 when MicroStrategy will actually have the ability to soft call those if the 130% hits for them. So they improved the terms on that, which gives them an earlier out. So if you're looking through, if you're looking at cycles, right, there's a chance where by the end of 2025, you could see the holders in a position to convert. But 2026 is when MicroStrategy is going to kind of be able to force it. And I don't know that you'll actually see them force a lot of these. I think they're kind of hoping that the share price takes care of it, where the price runs high enough that the call options just trading like equity now, and these ARB guys are basically getting fully hedged out. And if it's not coming back down, they've got a carrying cost to hold that hedge. So it becomes more incentivized for them to get out of that trade if they can convert and then try to get into the next round, reset their delta, they're back to trading. So when you see that, that's really good for MicroStrategy. If they soft call these, so like the 2027s, MicroStrategy can call those, right? It's calling for cash redemption, but because they're so far in the money, no one's going to take cash, and the bondholders have the right to take the shares. So they'll take the shares, but it's a cat and mouse game because there's a table in all the indentures for the bonds where if MicroStrategy calls it early, they actually owe more shares to the bondholders. So there's this cat and mouse game right now on the 2027s, I think, where MicroStrategy is sitting there kind of hoping that the bondholders are going to convert early, because then it's just the normal amount of shares. And the bondholders might be waiting to the end of the year going, how bad do they want to issue a new convert? Maybe they want to free up the space on the balance sheet so they can do a bigger convert. Because right now I think they have space for like 3 billion if they wanted. Well, maybe they can get it to 4, right? If one of these falls off. So I think that's what you're watching right now. In the ATM, right now the ATM is the fastest tool to deploy. So it's the most opportunistic tool that they have in their tool belt for this, because you can wait for things like the spike that just happened recently, right? We got this massive repricing and that ATM's ready, right? And when those spikes happen, the volume spikes along with it, which means they can sell higher levels into that market, which is bothering a lot of people right now, right? Obviously, if you're watching the internet, people are very upset. But while the price was going up, we were cheering for it, right? And we know the design of this thing now. So we can't be surprised every time that the stock is feeling like it's got a headwind on it, particularly coming into the end of the year where you've got a guy at the helm who's clearly trying to be very aggressive before he enters into the new year, right? All you have to do is believe what he tells you, and you'll understand more how the stock's trading. And I do think eventually we're going to get another expansion phase here, and MicroStrategy is going to reprice, and they'll use the ATM again once it gets up there. But there's a reason that those reprices are so violent, right? You don't see a slow grind, right? You see a vertical move and it resets and it's got a new floor. And that's how I think we're going to see this behaving, because every time they use that ATM, that's more permanent capital on the balance sheet. It compresses the MNAV. Now you've got all these traders that are trading around the MNAV, and they're seeing that the MNAV's down below the average, and so they're going to trade a mean reversion on the MNAV, and you get all these impacts in the market. So long-winded answer to say, yes, convertibles are the most accretive. The ATM's accretive, but less so when that MNAV really compresses. But right now, I think it's an opportunistic move. He's trying to essentially front run what I think he believes is coming, and he probably knows better than we do what's coming, because anyone who wants to talk Bitcoin is calling that guy's phone.
Yeah, the ATM is to blame for everything. Like, is the ATM in the room with us right now? Like, come on, it's like the ATM is the boogeyman at this point. But I think that just goes to show that I was kind of cautioning against selling covered calls, like I do, but at the same time, long leverage with short dates on them is a recipe for disaster too. And it's not just the ATM is to blame, but when we ran up to pre-split 2,000 a share, if you YOLO'd into those at the top, you were fine if you had a year long, long call. But if you had 1 week, 2 weeks, 4 weeks, 3 months, 6 months, you got wrecked. So, time is your friend, and you have to give yourself enough time to be right on those types of things. And if you do that, then the ATM doesn't matter. It only helps you in the long run.
And you have to train yourself in your emotions while you're trading. It's the biggest downfall most people have. Yep. And they won't recognize it, right? It's kind of like that, picture of the guy riding the bike and he sticks the stick in the front tire. Now he's laying in the grass, going, oh, why'd the ATM do this to me? It's like you got emotional and you bought the top, right? Like you bought into the mania. But that's why I say when you study something like MicroStrategy and you know the design of the strategy and what that's going to bring, right? For people that are really concerned about the share price, I always point you to all of Saylor's marketing materials and look at what he's incentivized to do. What's his biggest marketing tool right now for this whole thing? It's the performance of the stock, right? He loves to talk about how they're outperforming NVIDIA by 3 times, right? It's his biggest marketing tool.
Mhm.
And if you think he's going to crush that long term, you're out of your mind, right? That is the greatest marketing tool that they have. So that's why I sit fairly comfortable when these things are happening, because I know what he needs to push this, right? To get other companies to adopt something like this, you have to show the success of the strategy over and over and over again. And because people are really just even figuring out, probably what the convertible bond market is, I'm guessing there's a ton of these companies that have never even explored this. He got into a new area that's basically starved for returns. I mean, how often did you ever hear anybody talking about convertible bonds? It was boring because you're buying convertible bonds on 15 vol assets. Like, where's the performance there, right? So now his success is breeding interest, right? Well, he's the flagship bearer for this whole thing. So when I look at those incentives, I go, this isn't a guy that's trying to smash his company's value and ruin his shareholders, right? I see a guy that's trying to put himself so far in the lead, it's not going to matter eventually. And he's going to let all these other companies come into the market and pick up the slack in the spot Bitcoin market, where you're just going to get a constant staggered buying pressure from all kinds of these new companies that are entering. And it's not just MicroStrategy that's doing these huge scale buys. So if you're concerned, and I pointed out in one of my threads today, I go, everyone that's yelling about being underwater and being down, 25 or 30%, I go, we're talking about 13 trading days. It's been 13 trading days that people are underwater. And if your investing horizon is 13 days, well, this is going to be a rough ride, right? Like, this is not the stock for you. I was, I trailed a lot of what Neither was doing, right? And so I'd done a lot of covered call selling, cash secured puts. And at one point I sold 170 cash secured puts, and they got crushed for like 2 months. I picked up the shares at $170. I was down 35%, like in a few days. Right. And I just had to ride it out. And now if I go tell someone, like, I bought a bunch of MicroStrategy at $170, like, that's a great time to get in, right? Time changes perspective. So as long as you have time on your side and you don't introduce a risk that you don't need to, like, so many people are so hungry for these 5x returns that aren't normal. Everyone needs to acknowledge that's not normal. It's very opportunistic, but you're introducing timing risk to your investment. So you can be 100% correct directionally, right? You might have the perfect thesis, but if you're going with all call options, you can be 100% wiped out because of a timing risk. You tried to time the direction. And most people can't do that. I can't do it, right? Which is why I give myself lots of time, because I go, this thing's going to ebb, it's going to flow. Like, it's the design of the strategy. And so as long as when you're investing, you keep that in mind, like if I bought the other day at 500, I wouldn't be sweating it right now. If I bought shares, I'd be like, well, that sucks. Like, I probably need to analyze why I bought that high up the extension, right? Because nothing's going vertical forever. Even Saylor can't have his stock going vertical forever, because that's not aligned with the incentives of all the other parties that are involved here, right? He needs it to move, not just one direction. And that's what it's doing now. And it's upsetting people, but you have to evaluate how you got in that position the first time, right? Like, at the top of that, that's when I was looking at selling covered calls. I'm going, they just reprice these options like crazy. They don't really want people buying these. Look how expensive these are. And because they're that expensive, I'm going to take that as a signal, right? Like, they doubled the implied vol, not quite, but they almost doubled the implied vol on these. And so I sold covered calls for February, I think, and 4 days later, I could close them out for an 80% gain, right? And now my shares are unencumbered, and it was just great. But you just have to understand how this is going to move and be ready for when it does. Because if you're selling covered calls, and I give Soleil all the credit in the world, because I was never really doing much of it, and I watched a million of his orange pill videos, and then started writing my own programs to do this stuff. But on MicroStrategy, I might only sell covered calls once a quarter because that's all you
Right.
need, right? You can be opportunistic here. You don't have to do it every week. I was doing that for a while, and man, you lose your shares a lot.
Yeah.
So I don't do that anymore. But when you start to pick up on those trends, you can start to really refine how you're going to execute on this and get a plan that you stick to so you don't do anything emotional on these run-ups. You have to recognize it's running right up, but at some point it's also coming down because that's the whole design to this. The volatility pushes it higher and the volatility pushes it lower. And if you missed one of the extension legs, you'll get to reset at some point.
Well, I'm just going to turn over the Orange Pill Investor channel to you, Ben. Like you're the
No,
Jedi.
please don't.
and
I
I'm
don't have nearly enough time. Please
Yeah,
don't.
you're the Jedi.
You're a
and
way
I'm the
better host
Padawan
for
of
that than
people.
I am.
I want to get you, Jeff, in as well here. You've been taking notes for a little while. If you have some thoughts on
I'm
that.
ready to buy Ben's book. He's going to write a whole book about, digital assets in the 21st century and, MicroStrategy, how they manage this volatility period. I'll help write the foreword, I guess, if you need it. And
I can only pontificate here, right? I mean, my
Honestly,
wife keeps asking me, how's your internet thing going with your internet friends? I'm like, it's not an internet thing. We are premier analysts of the biggest holder of digital capital on earth.
Yeah. Speaking of
they'll
books,
humble you fast.
Speaking of books, guys, Shant has been super nice and sent me these two amazing books that immediately became my favorite Bitcoin books. I would say, okay, I do also have Jeff Booth's, but should I buy MicroStrategy stock? And just to give you an idea of how wonderful this book is.
Yes.
Yes, you should. These are great books. Highly recommend them. Thank you, Shant. I don't know if you're watching, but I'll tweet it out as well for sure.
Yeah, I got a couple more things to add just on
yes.
what Ben had said.
It's what we're here for.
Most of the convertible debt that's in the market expires without converting, like 80 to 90% of it. So think about holding this debt for like 4 or 6 years. 80 to 90% of the market it's just debt. It doesn't convert into equity. And in my conversation with Richard Byworth, he kind of outlined, most of the analysis on many of these convertible debt deals, you think about a situation where they're converting like in year 4 or, like near the end of the term of the debt expiration, not 6 months from when you wrote it. So the performance of the convertible debt, MicroStrategy's convertible debt, is like well outperformed any other piece of convertible debt in the entire market by a long shot. And Jeff Park talks about this a lot as well. And there's this game theory component with this too, where any convertible bond manager that's adding this to their portfolio is outperforming every other convertible bond manager. So just as Saylor is using his stock performance to market his whole, structure, these hedge fund managers or these convertible managers are going to be using the same thing. They're going to say, look at the performance of my portfolio, and I just whooped ass on all of these other guys in the market. You should move your capital over to me because I am running a better portfolio. And that is in the works, right? That is being initiated at the moment. The other thing I was going to mention, Ben, you brought up everybody's mad on the internet about the last 13 days. I have seen so many new people on Twitter within the last 10 days that have like 25 to 50 followers. And I'm always very suspicious of these profiles because this is the exact scenario that I saw with GameStop when GameStop got crazy. What happened was there were on Reddit, on r/Wall Street Bets, there was these people that come out of the woodworks just to make noise. And they're bots, they're fake people, fake profiles, whoever they may be. They posted 0 comments previously, and all of a sudden they've got a portfolio, they've got a profile, and they're making comments about MicroStrategy or whatever. And I caution everyone to pay attention to the people that are making these comments, because a lot of them have no idea what they're talking about. You have no idea where they're created. You have no idea if it's a bot. You have no idea if it's a hedge fund that's underwater on a position. And I was actually really frustrated with the entire market for doing this follow for follow thing, because that really is not, like, there's no proof of work there, right? Like, if you want followers, like, put work out there, and for like put interesting stuff out there for people to follow you, and that is alpha in and of itself. Like, how many people you're following and how many people are following you is alpha, and that creates so much noise where these people and these bots that can kind of get infiltrated, and you all of a sudden lose whether or not somebody is credible or not. And so I'm really suspicious of that activity, and I think we're going to see a lot more of it. And I hope people stop doing that. Like, put work out there. If you want people to follow you, put work out there. People will follow you. Tag people, have conversations, be active in the community. Like, that is what this stuff is for. And trust me, the money is not worth it. Like, if you're looking to get paid by Twitter, it is not worth it. Like, is just like totally not worth it. So don't do it. You have to get like millions of impressions for like $50, right? Like, it's just, trust me, it's not worth it.
I always said if I had a lawyer, I could, if I was employed and making the money I was making on X, I'd be able to sue my employer for paying me well under minimum wage, right? I mean, like with 30,000 people, just so people understand what this means, right? Like, I've got 32,000 people or whatever. My biggest week ever when I got a sailor follow, right? My biggest week ever was like $220. Most of the time, and I've only had 3 periods that were over $100, right? So if you're doing this thinking that, you're going to be one of these influencers showing that they're getting $15,000, well, X has deals with people, right, to push the creator program for their profile, and they get much higher payouts than any of us are getting, right? So if you're doing that and you're thinking that you're going to be getting thousands of dollars a month to go buy Bitcoin with, like, it's not coming, right? It's not going to happen. So just be prepared for that.
Yeah, and if you are going to be
the goes into it stuff. Sorry.
And if you are going to be the next, influencer with millions of followers, you're not going to get it for follow. Like, that's proof of fake. That's not proof of work. So you're going to have to.
But we need more people putting out good information, right? I mean, people are hungry for it. Like, I've been stunned because normally you'd think that the kind of stuff we put out is just like nerd talk on the internet, right? Like, we're just out here building spreadsheets and, pontificating about things. And you don't think people are going to be interested in it. But there's a real good information vacuum out there. So people are always looking for it. And so, like, I try to spend a ton of time trying to respond to people that are asking, good faith questions, not the bot ones that Jeff's talking about, because that's real. But man, do you lose control of that really fast. Like, my DMs are a war zone and there's no catching up, right? I mean, it gets crazy. And even when you limit it, it gets crazy. It's just wild. So if people want to put out good content, people will amplify it, right? People share good information very freely because everyone's looking for it. So please put out good information to get your followers, because we need more people doing it.
The other thing I was going to say, somebody brought up, I think it was Christoph, how do you manage euphoria in a cycle or all this stuff? I encourage people to make little subgroups and stuff too, of people that you've been communicating with for a long time. I mean, like, this True North group is basically this group of guys. Like, we had a DM going for, I don't know, 6 months. And it was like, why don't we just have weekly calls? And it just kind of made sense to do that. And I think it would make sense for other groups of people to, get together and have, weekly calls or whatever to help communicate with other people that are in a similar position to you. I know it's often really hard to talk to normal people about this shit because nobody understands. Nobody quite understands, like, the size, the scale, the gravity of a lot of this stuff. So, talk with people, communicate with people, but make sure it's the right people. Vet them out, have conversations. And, I think that stuff, along with these, covered call strategies, is skimming capital off the top, is really helpful.
Yeah, and your vision with True North about, trying to filter out the noise and give
Mm.
people some reliable information, it's already starting to work. Today, I I shared one of Saylor's interviews, and he literally stated, "I will know the results of the QQQ inclusion when you do." And I was covering that in a Spaces, and somebody asked that question. I'm like, "Hell if I know." But I happened to be listening to him get interviewed, so then I followed up and I posted, "Hey, this is what he said," and I quoted him. And someone, was, I guess, listening to someone FUD about it, and then they linked, they reposted that in their tweet, and then the person who was, fudding ended up deleting their comment. So, exactly what you wanted to happen with True North is definitely happening. And like, you gave me, probably a bigger platform to reach. And if you hadn't done that, then this person wouldn't have seen my tweet that they could then share the actual information with people. So True North is definitely doing some good things already.
Absolutely. A great show. And you guys are still doing both Mondays and Wednesdays, right? I've been a little bit out
It
of.
started. It's only Wednesdays. Mondays have been
Yeah.
kind of an impromptu. We still
Okay.
have an internal call on Mondays that we have, but an impromptu. If there's a lot of things happening in the market, like we'll have a Monday call, but it'll be
Yeah.
Wednesday, like in perpetuity. That's the goal.
All right, perfect. Good to know. And definitely a must watch for anyone listening in now. The MicroStrategy True North show, which goes out from both the MicroStrategy True North X handle, but also on the Quant Bros YouTube channel. Is that correct?
Goes out on the Quant Bros YouTube channel, MicroStrategy True North X channel, and then also on my channel as well. And that runs 7 p.m. Pacific on Wednesday, 10 p.m. Eastern.
All right, gotcha. Sweet. Good plug for high quality
High quality
content. High quality. All right, so I want to ask you guys also, because we've spoken already a little bit about this last, what is it, 13 days of sideways or downwards MSTR price movement, and people are stressing out a little bit. So my thoughts, and I want to hear you guys' response to it. My thought is, well, I mean, he's stacking anywhere between 17 and 55,000 Bitcoin a week while this is happening. And when the price is going sideways to down a little bit, we're seeing the MNAV being suppressed. The diluted MNAV, which means all the shares, including the ones that are now promised through convertible bonds, etc. Just to see it right now, it's 2.38. So, and I remember like a month ago, it was like more than 3 or something. So that has been compressed. So the way I am looking at it, and I want to hear what you guys think is, so he's just putting in more Bitcoin on the balance sheet right now. So my gut feeling is that when Bitcoin starts ripping, the leverage of Bitcoin on the balance sheet is just higher, and we see a even bigger response in MicroStrategy. Have I got that wrong, or what is your expectations for when Bitcoin does start to move, what that will do for MicroStrategy's stock price? Anyone who want to go first?
Yeah, well, there's kind of a lot
I'm
there.
completely off. I can hear.
Yeah.
Otherwise,
No,
Okay.
I'm in agreement with you, right? Like,
Okay.
just in the last 2 weeks, right? Sailors raised $3.6 billion in share issuance. Like, think about how insane that is. Do you know how hard it is to raise $100 million? Like, Ben, you've gone out for capital raises before, right? Like, raising capital is really hard. Okay. And so Sailor has just raised $100 million 36 times in 2 weeks. Like, think about how insane that is, right? And that's the pressure that's been put on the stock, and the prices stayed flat, right? Like, I was talking with Ben about a week ago, and just a couple of days ago, and we were looking at the stock price. I don't remember the last time the MicroStrategy stock hasn't moved more than 1% in a week. I mean, yeah, there was some intra-week volatility, but like if you zoomed out to the week, it was like 1% movement. And I don't think there's been a week like that since last August. And so in thinking about just like the pressure, the sell side dynamic, the ATM, and the horizon in a circumstance where MicroStrategy isn't able to utilize the ATM, like a blackout period, which we've talked about a little bit, which is like leading up to an earnings call. There's a typical blackout period where an ATM can't be utilized. If anybody wants to go look, you can go look at the $21 billion capital plan. You can look, there's a period of non-material information, and it mentions earnings calls. So there is a blackout period. It is in the SEC filing. You could go look it up. So I'm in agreement with you that as that pressure is relieved, we could see a more leverage type effect, because there is more effective leverage on the balance sheet. But Ben, I know you have a million thoughts on this, so I'm going to pass it over.
Yeah, no, I think you're right on all of that. His ability to raise capital is mind-boggling, right? Like any other company that would go out and try to do an ATM like this, people would revolt in the streets over it, right? And here, other than the last 13 days, right? Other than that, everyone here at least understands the intent behind it. And so when people are looking at it and they're used to hearing ATM equals share sales equals dilution, one of the things that you have to learn here is you have to learn to separate what you mean in your mind about dilution, right? So you can look at it from two perspectives, right? Where are you getting diluted? And that's voting rights, right? So your voting rights are getting diluted. No way around it. That's a fact. Sailors are also getting diluted. But your value is not getting diluted, because dollar for dollar, when they sell those shares, it's going into Bitcoin, which shifts over to the balance sheet, which lives as permanent capital now within the company's financials in perpetuity, right? Yes, it fluctuates with market value, but Bitcoin are there. So it's a really interesting case study for most of corporate America to figure out why this has been so well received. And part of it is when you look at, guys like Soleil, who's criminally underfollowed on X, by the way. Like, I think we've got more people on the stream that are following him, but I followed him when he had like far fewer, and he's been massively helpful to me in so many ways in terms of learning how to deploy the asset MicroStrategy and thinking about how to do it long term to live off it. You guys probably covered all that earlier when I wasn't here, but go follow him, because you got to educate yourself well before you get to that point. So, all right, there's my plug for Soleil, because he's criminally underfollowed. But back to the ATM. So when you change that in your mind and you understand that, yes, share rights or voting rights, those are getting diluted. But if you're okay with that, and you look at, am I losing any value in this transaction? Well, other than, maybe the market value of the share not running during that time period, no. You're getting an asset that now gets to perform for your shares in perpetuity, because he's not selling them, right? So your thesis has to be aligned to Bitcoin going up, and you have to explore what are your beliefs about Bitcoin itself, the asset. The two are unbreakably linked now. And the valuation in the future is directly tied to that outcome. So if you look at all the catalysts that are coming and you don't think this is a good use of capital for them, then this isn't the stock for you to be in. But if you understand what he's trying to do, where he's building this massive foundation of hard capital that's just finally entering its growth phase, right? It's finally hitting the adoption phase. It's finally getting into the broader conversations with the people that used to attack it regularly, right? All the politicians and all these people, you're finally in that phase. And you got to ask yourself, if you're starting to be bearish on Bitcoin, you have to ask yourself why. Like, the time to be bearish on Bitcoin was the last decade and a half, when everyone was trying to fight against it. Now everyone's figured out they're in the, if you can't beat it, join it phase, right? So if you've been holding Bitcoin for years and you just reached this point and now you're thinking about selling, you really need to evaluate for yourself, why would I finally sell it when it just started going in my favor, right? If things are just turning, why am I getting out of this? So I understand the strategy he's using when he's deploying this capital and raising all this capital through the convertible bonds or the ATM, because I think he's racing a clock right now and he's feeling that pressure, right? It's like that interview that he had before where he said he stays up at night thinking that everyone else is going to figure this out before he gets enough. I think he's now realizing everyone's figuring this out and he doesn't feel like he has enough. And so he's trying to make that push because he's probably got 6 months before bigger buyers than him are going to start showing up. And then you got that competition. So he's got that race to the finish here. So I don't sweat it too much, because if I think that all of those tailwinds are going to result in a massively higher Bitcoin price, I think the floor price at a 1 times MNAV is going to be double or triple what the share price is today. So, and if I think that's happening in the next 2 years, I don't care, because
Wow.
we've been so used to 10% returns being a great return in the stock market. And now we're upset if we're not getting 500%. Like, we are in a privileged spot on this stock. We've been spoiled. And it changes your entire mental capacity to realize what's a good return. Where if we're not getting 20% a week, we think we're down, right? Like, that's starting to happen. People are starting to get that mindset, and it's dangerous. You've got to pull your perspective back and go, all your wealth modeling you used to do with your financial advisors or by yourself when you're taking your retirement accounts and you're estimating the future value of it and at your retirement age in 30 years or 20 years or whatever, you're plugging in 9% as a return, 10% maybe if you're aggressive. But this is wild. Like, we're getting decades of return. This is teleporting your financial picture years into the future if you'd invested in this pretty heavily early on. And that's buying your future time. So that's usually my pitch here when I get people to think about what's he doing with this capital and why is it that we're getting upset about. I don't get upset about it because I think that's the vision. That's the vision I have. And I view it as a way for myself to teleport my financial picture decades into the future of where it would be if I just went the responsible route that everyone had been taught for so many years with, 7 assets that perform and 493 that drag down the return, right? That's what everyone's gotten used to and just accepted as normal. We just started figuring out there's a better way if you take a concentrated bet on somebody that has a forward-thinking strategy, right? That's what I think we're doing here. That's what I'm doing here.
Yeah, I feel like I just stepped into a time machine and came out 5 or 10 years from now.
Yeah, I keep all my old models, right? When I used to do retirement modeling and things like that, I keep all of those.
8% CAGR.
Sure.
S&P 500. You're like,
you have to refer back to it to keep perspective, right? Because every time you get a run and all of a sudden you go and, everyone does, maybe I'm just weird and I do this, but every time it does a big run, you're recalculating everything in the back. Like, where am I at today, right? Well, that's your new baseline. And you quickly forget where it was, 6 months ago or a year ago. But when you keep track of that over time, for people that aren't tracking things like your net worth, it's a very valuable tool, because if you don't know where you stand and where your assets are and how you're deploying your assets, how can you optimize for the best future out of that, right? If you don't know, you can't do it. So it's a very valuable tool to, 1, keep perspective, but 2, track progress and hit targets, right? You have to know what they are and you have to know how far away they are so you can back into what you need to achieve to do that. And so many people, got stuck in this hamster wheel or never learned or never were in a spot to even learn. Like, they might not have any people around them that have ever done any, planning for retirement or, estate planning or any of this kind of stuff, where they might be coming on to X right now. And this is why we take this stuff very seriously, because it's hard to get good information on that. And financial advisors typically aren't wealth creation partners, right? They're wealth preservation partners. That's a different thing.
Yep.
That's you've made money, you need to protect it so you don't lose it, but they're not going to put you in the position to grow that money, right? Other than a standard market return. So you have to acknowledge that before, and you have to do the work, because no one else is coming to bail you out on this. So anyways, I've ranted for quite a while, but that's kind of my view on this whole topic.
The Grain of Salt had a good idea, is track your net worth in a 30-day moving average too. And I thought that was a really good way to do it, because especially if you're holding, a really volatile stock that goes up 40% in 2 days. Yeah, it's helpful to have that, long-term moving average view. So you keep your baseline and your relativity mentally appropriate, right? Because it's really easy to see your portfolio spike up and then go back down, and you're like upset that you didn't make any moves or changes or something when it was really high. But then you zoom out and you're like, wait, hold on, I'm double where I was like a month and a half ago. So it's it's a weird mental scenario. But Ben, I did want to go back to what you were saying on the Treasury strategy. And if you think about all, like, most companies in the entire equity market are fiat Treasury companies. So they all of these companies have treasuries that they manage, and they're either in cash, or they're doing stock buybacks, or they're buying real estate, or they're doing all these other things. So typically, prior to Bitcoin being available, if you were to think of any company doing a convertible debt offering, they would take that income and go, buy a piece of real estate, or build a warehouse, or, go do something that takes a really long time to invest in. I think Saylor's brought this up on one of his recent podcasts with, like, if you buy a piece of real estate, you've got 5 years before you're generating any value from that real estate. Now, in this scenario with MicroStrategy, you have instant value. You've purchased the asset on day one, right? You generate the income and you're purchasing the asset on day one. So it's the value of a Bitcoin treasury strategy is the ability to buy a quick moving, fast appreciating piece of, I guess, digital property. So, which kind of comes into the QQQ question, which we'll find out on Friday if MicroStrategy gets included in QQQ. There's been a lot of FUD, I think, recently about them being a financial company, but with that guise of, having an understanding that they're a Bitcoin treasury company, and most other companies are fiat treasury companies, I think they won't get treated as a financial company. And, they are technically a software tech company as defined by FTSE, which is the categorical definition of, what a company is defined as for QQQ. So that could be a bullish catalyst on the horizon to happen on Friday. And if that occurs, there could be a significant buy side volume from folks that are front running QQQ and funds that are managing a QQQ correlated proxy, where they're having to buy MicroStrategy at any price. So I could see a situation where MicroStrategy could deploy and finish their entire ATM within the next couple of weeks if there's a significant increase in volume that's buying at any price. So will be interesting to watch. The next couple of weeks will be really interesting to watch. And if that's the case, right, if MicroStrategy raises another $9 billion in the next couple of weeks, Bitcoin's going to moon, because that money is smash buying Bitcoin on the back end. So the rest of Q4, the next 3 weeks, could be electric. We'll see.
Yeah, no, absolutely. And I think there's been many people saying, well, why doesn't the price of Bitcoin really move any further up, because he's buying billions of dollars worth of Bitcoin. But I think if you look at the price graph compared to earlier bull runs, he might have been putting a floor under it, because we had some more massive drawdowns in 21 and in 17, if you start looking historical, and we haven't really had those 30% corrections in the price of Bitcoin. So maybe the price is not skyrocketing right now, but it could be the effect of all of this buying from MicroStrategy really is putting a bit of a safety net under the price. You guys thought anyone want to jump in there?
Yeah, I think people get confused with the end date of the purchases and what happened during the period of purchasing. Because if you go back and you look at the announcements for when they purchased, and then you go pull up the chart for what Bitcoin did during the period where they were purchasing, where they said between this date and this date, it's always going up. Like, pull up the chart. It hasn't stopped going up in since beginning of November.
Yeah.
right? So it's definitely having an impact, right? We're up
Yeah.
almost, 30 some $1,000s a Bitcoin over the last, month and a couple of weeks. Like it's definitely going up, right? That's that conditioning we have where if it's not going up $5,000 a day, we think it's going down, right? But if you just take a second and zoom out and pull up the chart and just look at it, you go, it's definitely having an impact, a pretty big one, right? So I don't see that part as being an issue. I think it's going to continue to move when he does it, and it's probably going to continue to move even more. 100,000 was it was so easy for it to break through. It was almost shocking, right? Like I expected 100,000 to put up a fight, and it just kind of jumped over, right? I mean, it got denied like once, but as soon as it hit it, it just popped over it immediately. Like those must have all just been pretend, or people thought better and went, well, maybe this isn't the spot because if I believe what this guy's saying, and you should, he's going to keep buying billions. How long can I hold this line? Maybe I should move the line higher. But the QQQ stuff, yeah, I mean, Friday after close, we'll figure out what's going on there. I take some comfort in the fact that if you go look at like the chairman of Invesco, who does QQQ, he's invested in all kinds of digital asset projects and companies and all this. Like he's hardly against Bitcoin. And I think that you do have a hard case to make when you look at MicroStrategy and people are trying to shoehorn them into a financial company, because essentially what they'd be doing is deviating from their own methodology to single out one organization because that organization deploys their treasury better than other organizations, right? Every company has a treasury. Yes, it's normally just been a dog of a organization because they're like buying T-bills and things, and it's just been so unexciting that no one ever paid attention. But to me, the lowest risk thing for them to do is just let them in. And if ultimately, if they go do some review and they come up with a broader methodology that they can apply standard across the market, they can just take them out of the index, right? Like that's not as big of a deal as specifically changing the rules from what you've stated to single out one organization and deny them entry, even though technically they meet all your criteria. So I think they're getting in personally. If it comes Friday and they don't, well, then I spent a whole bunch of time tracking things I didn't need to bother tracking for a long time. So, that'll be a bummer. But I just feel like everything's kind of in their favor right now, and 100% of their revenue is coming from software. So unless you're going to say that you're totally ignoring the entire income statement of a company when you're classifying them and where their actual revenues are coming from, I don't see them just making a knee-jerk change to how they're classifying them. And keep in mind that companies like PayPal are in there, right? Like people keep saying that, MicroStrategy is going to be a Bitcoin bank, but they're very much not a bank, guys. Like just saying it doesn't make it a thing.
Yeah.
So, it's a very different concept. I think he's made a lot of comments around, there's similarities to being an investment bank, right? Because they're securitizing Bitcoin and they're issuing securities that are backed by, like that's a different type of a conversation, but they're definitely not a Bitcoin bank yet. It might be aspirational, but it's not what they are, not yet. So I still say that they get in, if you ask me, but Friday is going to be the day. And if I'm wrong, well, then I'm wrong, right? I've been wrong before. I'll be wrong again. So, but I think they're getting in. And a lot of the companies like Cantor and all those, they also think they're getting in, and they'd have much closer information to that than I would. So that does lead me in the direction of they're probably getting in.
Well, let's take a quick poll here around the table. Ben thinks they get in. I think they get in. Jeff?
Yes.
Soleil?
Yeah, they get in.
Yeah.
They're getting in. Okay, there it is. So I don't know if it's American HODL there in the comments. It probably is. I think it's a relevant question regardless. And this would be for you. This is for you guys, the quants here that understand these financial tools. Thoughts on sailors switching to warrants away from at the market shares? Is that something that's possible? Any of you have the information to answer that question?
It's possible. Fred Krueger brought this up, which is hilarious because he's been so bearish on MicroStrategy for so long. Actually, somebody else shared this with me as well. But I think it's very possible that there are other financial instruments that are going to be tapped into here to access different capital pools. It's going to be warrants. It's going to be true debt instruments with actual interest rates. It's going to be preferred stock, dividend products. The list is very long of financial products that you can use to generate capital. So it would be less dilutive. There's a horizon on those at a point in the future as well. So I wouldn't be surprised. That wouldn't be a surprise to me at all. Tapping all these different pools of capital.
Gotcha.
I think it would be more likely if they weren't getting 0% on the convertible bonds right now. I think for the moment, using the convertible bonds, if they're continue to get 0% on their offerings and they can keep building out that ladder until they reach a point where they're kind of maxed out on the debt leverage, right? Where they've rebuilt that ladder with the full capacity of what they can hold now and probably a little above that, right? Maybe they get to 15 billion in outstanding convertible debt. And then they say, we don't want to take on any more debt. Maybe we'll use another derivative product to raise capital that uses the equity, right, to pay for them. And they could go and issue warrants to collect capital so that they're not adding additional debt to the balance sheet. Or maybe that happens during a drawdown period where Bitcoins draw down and the leverage ratio is higher, right? Because if the market value of Bitcoin comes down, that's going to increase their debt leverage ratio. And maybe instead of using an ATM, maybe then they switch to warrants and they start issuing those to raise additional capital using shares further out in the money, right? Where you're still raising at future values, but you're getting the capital today. So I think it's absolutely a possibility, but I think for the moment, they're going to be hyper-focused on these convertible bond offerings because they've got a big ladder to build back out. As of tomorrow, as long as we close above $302.54, something like that, every one of the 5 bonds that I've been tracking, other than the one they just issued, are all going to be eligible for early conversion, every single one of them, which is wild for convertible bonds, right? That doesn't happen. So the entire ladder, except the one they just issued like a couple weeks ago, are going to be eligible to convert. So that puts them in a very unique spot because if those do convert, if the price keeps moving up, another incentive for them to get the price higher, if the price moves up and they get these bondholders in a position where they want to convert, now they've got an empty ladder to refill. All they would have is $3 billion in 2029. And if Bitcoin keeps performing, they might have 15 billion worth of capacity they can hold. That means they can start laddering $3 billion over a 5-year period and rebuild that ladder. So I think that's going to be their focus first, is getting that set up with the intent that that's probably longer term, right? That's longer term debt. And if they're doing it at higher share prices, those strikes are getting higher. So it might take some more time to get there. But once they've rebuilt that, that's when I start thinking that we start seeing more of that creativity and the types of products they're going to release. Yeah, go ahead, Jeff.
I just want to add one more thing there is if we think about the ATM, who is buying these shares at the market? It's not retail, right? Retail probably makes up some portion of the new share purchases at the market, but it's not the $15 billion that's been raised in the last 30 days. We're talking large institutional capital, likely, ETFs that are tracking this stuff, people that are front running ETF inclusion, and big money for the most part. I suspect. You can look at some of the dark pool transactions. Some of the transactions that are being made are, hundreds of thousands of shares being purchased in, single big blocks. So, I think the ATM, while people, are frustrated that there's pressure on the stock, I think those are actually really good long-term buyers and long-term holders that continue to put pressure on shares that are trading at the margin. And I think that might, I got to contemplate this a little bit more, but I think that might be more valuable than selling warrants that could go poorly. If timing risk comes into play, right? Because a warrant is effectively like a call option that would be sold outside of like the existing call option framework where, you'd buy a warrant to hit a certain price at a certain point in time. But if it doesn't hit that price at a certain point in time, it expires worthless effectively. And there could be a narrative that could be bad for the narrative if something poor happened, right? If these warrants didn't get exercised for whatever reason, black swan event, and that's worse. That was probably worse for the stock than just ATM having people hold underlying equity. So I don't know. I've got to think about that a lot more. And the reason the convertible debt's really appealing is because the people that are buying the convertible debt have all these other instruments that they use to manage their downside. They're shorting the stock right away, which effectively puts the dilution into the market almost immediately, at least like 70% of the dilution into the market almost immediately with shorting the stock. So it's not that much better than the ATM. But anyway,
it's the liquidity it provides, right?
Yeah.
Like the convertible bonds bring in a big pool of liquidity because these guys are actively trading shares through the delta hedging. That's what's important about them, right? One of the things that they tote with MicroStrategy is it's a giant liquid pool of capital that you can trade in and out of at scale. And so for right now, I think that's what they want. I think they want all these bonds out there with shares tied to them that are being actively traded or hedged against, right? Which is shorting them, buying them back, right? It's creating that liquidity in the market, and they're using these big hedge funds to do it. That's why I think that's so valuable right now, is they just really wanted that liquidity profile to be really high. And eventually maybe they'll move on to warrants. But for right now, I think they're kind of in the, if it's not broke, don't fix it phase. And unless they get to a point where they can't raise that capital still, or they're running out of buyers in the convertible bond market, which is a long way off when you're the top performing convertible bond issuer, I think they'll keep doing what they're doing for probably at least, the next year.
And I think it's interesting to see how he keeps improving the convertible bond conditions or terms for MicroStrategy each time, right? I think that the previous one was not a 0% premium, like zero interest rate, right? And it wasn't 55% premium to the price. Yet the product, even though he makes it slightly worse for the customer, it's still the best performing convertible bond option out there for anyone to buy, right? Until maybe Marathon and Riot start being a little bit more competitive. I don't know, but I guess MicroStrategy is the safe horse to bet on, and has the by far best performing convertible bonds, right? So you can keep tweaking that, and it's all just money going down to the bottom line for the shareholders. And when I say money, I obviously mean Bitcoin, because fiat currency is not money. Money can store value, and fiat currency has a built-in policy to destroy value. So yeah. Jeff, I know you have you're about time's up. Any final words? Plug away. MicroStrategy North, True North.
We've got True North on Wednesday at 7 p.m. Pacific. But please join. We'll be chatting through some of this stuff and other things that we see in the market. And other than that, MicroStrategy finished the day today just above Waste Management, Commercial Trash, and right below Chipotle. So, $2.65 guacamole. So I think we're going higher, just looking at relativities here, but, not financial advice. Appreciate the time, Anders, and we'll catch you next week.
Yeah. Thank you so much, Jeff. Look forward. Hope to see you next Monday. And thanks for being here. Appreciate your knowledge, man.
Absolutely. Take it easy. See you guys.
See you, Jeff.
Ben, how is your voice holding up? Again, thanks for joining us despite being under the weather.
It's doing good. It'll start fading on me here pretty quick. I can feel it scratching up a little bit, but I've been limiting the amount of time I spend, yapping on the internet. So people are wondering why I'm not going on my long rants every single day of the week like I had been doing for a while. That's why. I'll be back. Don't think you're out of those yet, but
and we want you back, Ben. But I have one question here still, and for you guys. Actually, wouldn't mind heard Jeff's opinion as well. But let's take it the three of us here. I know we've been talking a lot about all these exciting catalysts, including QQQ, which is happening right now, and what they could do from the stock price of MicroStrategy, and people have been speculating on MNAV going to maybe 6, like it was in the last bull run in 21. or potentially even higher, like GameStop MNAV at 40. But I see a difference here and then GameStop, because we have Sailor, who, when MNAV goes up, has a lever to pull for the benefit of the shareholders, which is selling stock into that higher MNAV, which then generates more Bitcoin on the balance sheet. But still, he has a lever to pull. When the MNAV goes up, he starts selling shares. So is it even realistic for the dreamers to think MNAV 6 and 10? And I know we don't have, definitive answers, but what's your thoughts?
Yeah, so I'm not quite sure yet how I look at the ultimate MNAV here and what we could get in a mania phase. I think, I try to keep myself grounded, because if my targets get too wild, my trade execution gets sloppy. So I try not to do that. So I've always viewed that this is going to expand and contract probably somewhere between, 1.75 to 5 is kind of the range that I've seen. Like 5 would be when you get these big, mania spikes, and then 1.75 would be Sailor smashing the ATM for several months on end, right? That's kind of where I tend to model it out for myself. And I leave any of those massive pops to the upside as just a, wow, that would be awesome, right? Like, I'm not against it. I'm rooting for it. But it's a little bit different than it's a lot different than a GameStop, right? GameStop, you had this really weird scenario where it was all Wall Street shenanigans, and they'd shorted more than 100% of the stock that even existed. It was this weird game being played. MicroStrategy short interest really isn't that high. I know people go and look at it and they see, 30 million shares that are short, or whatever the number is now. I haven't looked in a little bit, but you got to realize how many of those are tied to the convertible bonds, right? Like, the convertible bonds that are just outstanding today have 29 million shares associated with them. And you can start to estimate a little bit. You have to do some modeling to figure out what the delta on the bonds would be, but that's deep down the nerd rabbit hole. But if you look at it and you say, if the stock price is way above the conversion price, the delta is probably pretty high. You're probably above an 80, right? Maybe into a 90 even. It's probably getting pretty close to just acting like equity. And if that's the case, you can bet that a good percentage of those shares are short right now. So when you look at that short interest, you can go, if I take the 29 million shares and I assume that, blended, these are something like 75, just figuring out what this would be, say 75% of them were sold short because some of them are deep in the money. Well, that's almost 22 million of the shares. And those aren't squeezable shares, because they can ride their short forever because they've got the shares from the convertible bond. There's no squeeze there. Particularly once they get, and if it squeezes, they'll just put on a full hedge and they'll ride that. I mean, now they're just locked. They've taken all the equity risk out. They've locked in their gain for a while. So I don't get quite as exuberant about short squeezes and that type of a mania, right? Just because, I don't see it. I don't see the math there in the short interest. It's not the short interest a lot of people think that it is, because of the nature of these convertible bonds. What you could get is, you got to remember that Bitcoin's its own asset. And now imagine somebody getting overly short on Bitcoin and getting squeezed, right? There's no relief there, right? There's no circuit breaker to shut that off.
Oh, the only relief there is death. But anyway,
it's over. Yeah.
Death to the bear.
You get wiped out, right? So maybe someone gets bold and steps in there and you get a Bitcoin squeeze that translates over to a MicroStrategy, squeeze, but just because Bitcoin's expanding really, really fast. And maybe you could get a wild MNAV from that. But that's kind of my view on the whole GameStop aspect of MicroStrategy. I don't really compare the two.
Yeah, as far as MNAV is concerned, I had to ask Grok what's MNAV after Quant Bros 1. So, you know what I mean? But so the only thing that I would say about it is, I'm not looking at a high MNAV as an excuse to get out of the trade, but I damn sure know it's not 1. So if it gets close to 1, if it gets under 1.5 or anywhere near 1 again, I'm going longer than I've ever been in my entire life. Because I think it was Pish that said he noticed it was like maybe below 1 or something, and he just went into long calls as far as it could go. and I'm sure that was probably under $50 a share at that point. So yeah, if that ever happens again, I will consider myself a lottery winner.
Yeah, that's. I think there's too many of us now sitting on the sidelines, hoping to see an MNAV around one or even below in the next bear market if one does
Right.
happen, and a lot of us will be going retarded, ridiculously, irresponsibly long with a big fat smile, and then enjoy 2 years of call options going way into the money, probably. All right, guys, we've been going for an hour 40 minutes. I know, Soleil, it's your time is almost up. I kind of also gotta end it sooner or later. And Ben, also, we want to protect your health, as both of you have seen in the comments today. Everybody loves you, guy. I want to include Jeff also on that, but he's not here right now. And I enjoy all the knowledge of MicroStrategy that's coming for you guys. So if we want to do some maybe some last words from you two, and then I'll round it off with a little announcement in the end. But
Yeah, the last thing I'll
Soleil.
say is something that you reminded me of, Anders, where you were talking about getting more favorable terms on the bond market, and I think that's inevitable. On the most recent interview that I saw him give, he was talking about the ATM sales actually pumping the volatility, and you get better terms when your stock is volatile, which is why nobody's selling convertible bonds in the S&P 500, because there's no volatility there. And so I think there's definitely going to be better terms. And I think maybe if the Fed lowers rates again, I think that's good for the bond market. So he might just be, because someone was asking, like, why is the ATM usage almost like done, but the other half of the 42 billion plan is kind of lagging behind. So maybe he's just slow playing it. He's pumping the market with the ATM so that he gets even better terms with the bond offerings at a later time. So it might just be slow playing that.
Interesting, very interesting, and yeah, Ben.
Yeah, I think the limiting factor on the convertible bonds was until recently, he didn't have the space on the balance sheet, right? Until Bitcoin made this run and he used the ATM to get unencumbered Bitcoin onto the balance sheet to raise that fair market value. He didn't really have the space, but I think part of it is he's probably waiting to get some indication, or he's probably calling these people to get some indication to figure out who's planning to convert, to really figure out what years he could place this debt in. Because keep in mind that they're really laddering these out to have one per year to spread that risk out over a long period of time, which would allow for cycles and things to play out. So he might want to get a good indication for what these bondholders are thinking so that he can formulate his own plan, because for all of them but the 2027s, it's not really up to him right now. It's up to them. He can't soft call those. So I think that's probably what he's waiting for, but I'll leave it at that.
Wonderful. Well, thank you both for being here today. Soleil, your debut here. Thank you very much for sharing your thoughts and being here. And definitely want you to come back again in the future. And Ben, of course, always as always, thank you very much for your wisdom there as well. So two small announcements. So Adrian, also from MicroStrategy True North, will be here next Monday. So that will be his debut, and it's Mr. Voice of Reason, I call him. And that'll be great. I'm looking forward to having Adrian on. And also, so this channel here originally took off because Poppy, my good friend, Pop Lord Hoddle, and I started Toxic Happy Hour. We did that in the summer of 2020. And one of the first shows we did back then was talking about this company that just bought $250 million worth of Bitcoin. And that was MicroStrategy. It was like, oh, that's cool. Like, the companies are coming. And then that turned into quite a spectacle on Wall Street for all of us. But then we did that for a year on YouTube. After 1 year, Spaces came. Puppy loves Spaces. I'm more loving to do YouTube. So he's doing Toxic Happy on Spaces. He's still my brother from another mother. I love my brother, Puppy. But tomorrow I am kicking back Toxic Happier to live for the first time in 3 years on this channel, and I will have Kyle, who is known for he's active in the BTC trading cards community. Super fun, smart young guy, and for those who don't know, the concept of Toxic Happy Hour is really just Bitcoin friends getting together, having a drink in a bar, and having a good time talking whatever comes to mind, Bitcoin or life outside Bitcoin, health, whatever. It's just about having a good time. So that'll be tomorrow, and that will be at 4 p.m. Pacific time. I'm going live with that. So on that note, Soleil and Ben, thank you so much. Shout out to obviously Jeff for being here earlier on. A small shout out also to Ryan for saying he would be here, so I could use his name as clickbait, and we got 5,000 more views because of that. And then he's not here. I'll try that again next Monday. Anyways, thank you guys. Enjoy. Thank you everyone for watching and participating in the chat and giving us good questions and good laughs. Especially there was one comment about if she doesn't have convertible bonds in her profile, he's swiping. I don't know if that's left or right, but that was fun. Anyways, thank you guys. See you in the next one.
Thanks, Anders. Had a blast.